All right, so we're diving deep into the Indian economy. This stack of research, focusing on India's strategy for January 2025, specifically this report, India Strategy, Themes and Insights, dated January 10th. It's got tons of charts, tables, expert analysis, a lot to unpack.
It is, and I think for a lot of people, they see a report like this and they just think, oh my gosh, how am I going to even begin to make sense of all this?
Exactly, and that's where we come in, right? We're going to try to break down the most important things from this report so that you can walk away feeling informed about what's going on in the Indian economy.
That's the goal. At least, yeah, trying to give everyone a little bit of a pulse on what's happening over there.
So, okay, let's start with something that I think a lot of people talk about, which is the monsoon. Did it deliver in 2024?
Well, it's kind of a mixed bag, right? And the report highlights some really big regional differences. So Northwest India got absolutely hammered. Rainfall was below average by almost 50% in some
Oh,
areas.
that's a huge number.
Yeah.
Early in the season, right?
Yeah, early in the season. And then the South Peninsula had the opposite problem. They were dealing with too much rain, early on at least.
Too much, not enough.
Yeah.
Okay, and so, I mean, obviously we all know the monsoon is important, but what does that actually mean then for agriculture in India?
Well, I mean, it obviously means some hardship for farmers, right? In the regions that were really hit hard by the drought, lower crop yields, it's going to mean less income, possibly even food shortages. So it's not a great situation. The report does say that reservoir levels have been recovering since August, though, so there is that.
Okay, so a bit of a glimmer of hope there.
A little bit,
Okay,
yeah, but it's really too early to say, what the long-term impact is going to be. We're just going to kind of have to see how things play out.
okay, so wait and see on the agriculture front. Okay, let's move on and talk about the rupee. It had a pretty rough year in 2024. I mean, from what I remember.
Yeah, it did. It hit a record low of 86 to the US dollar.
Oh, wow.
And the report predicts further depreciation, although they say it should be moderate, only about 2.5%.
Okay, but even still, that's not great.
No, it's not great. And that's assuming, that things go relatively smoothly. The report does say that there are some global factors that could really throw a wrench in things.
Oh, okay. What kind of things are we talking about?
Well, rising interest rates in the major economies, that always has an effect. And inflation is still a problem kind of globally. And there are those ongoing geopolitical tensions, so that always makes investors nervous. And when investors get nervous, they tend to move their money into safer assets, which can hurt emerging markets like India.
Got it. So, yeah, keep an eye on what's happening globally because that could have an impact on the rupee. Now, let's talk about something that hits maybe a little closer to home for a lot of people. The report talks about unsecured lending is something to really watch. So first of all, can you just break that down for us? What does that even mean, and why should we care about it?
Yeah, so unsecured lending is basically any type of loan that isn't backed by something like a house or a car. So think credit cards, personal loans, that sort of thing. And the RBI, which is India's central bank, has been tightening things up in that area. They're cracking down on what they see as aggressive lending practices and making it harder to borrow money.
So like if you're thinking about getting a loan for a new scooter, maybe think twice or...
Yeah, it's something to consider for sure. And it's not just about individual borrowers either. The report says that this tightening is starting to have an effect on things like credit card spending growth, which is slowing down. We're seeing fewer new cards being issued, and the total number of cards out there is pretty much flatlining.
So, okay, so it sounds like people are maybe starting to be a little more cautious with their spending then. Although there's this interesting part of the report that talks about passenger vehicle, PV, sales. Those are actually up, and there are some pretty big year-on-year growth numbers in there. I mean, isn't that kind of a contradiction?
Yeah, it does seem a bit counterintuitive, doesn't it? If credit is tightening, how are people buying all these new cars? It's a good question. Maybe they're dipping into their savings, or maybe there are other financing options out there. Or maybe it's a sign that people are actually more confident about the economy than the credit data suggests. It's hard to say for sure.
Yeah, I mean, it's fascinating, right? We've got this tightening credit, but then we've got strong auto sales. What's going on? Okay, well, let's move on to the stock market. So the Nifty, what's the outlook there?
Well, they're projecting earnings per share growth, EPS growth, through FY27 at a compound annual growth rate, CAGR, of over 14%, which sounds pretty good.
Okay, that does sound good.
and this is a big, but there have been some recent downward revisions to those earnings estimates.
Oh, okay, so not as good as it initially seemed.
No, not quite. And I think those revisions are really important because they reflect the concerns that analysts have about a lot of things we've already talked about. The monsoon, the rupee, the credit crunch, it's all connected.
Right, it's all part of this big, complex web.
It is.
Okay, so what about different sectors? What's the outlook there? Who are the winners and losers in this scenario?
Well, cement, metals, and telecom are expected to do pretty well in FY26. They should see some pretty solid earnings growth.
Okay, those are the winners.
Yeah, I guess you could say that. On the flip side, the financial sector, BFSI, and oil and gas, those are the ones that are likely to drag things down a bit.
Okay, and that's a pretty wide range. It really makes you wonder what's driving those differences, right? Why are some sectors thriving while others are struggling? Okay, and what about valuations? The nifty PE ratio, is it expensive, cheap? Where are we at?
Well, I think it's always helpful to look at the current PE ratio in relation to, its historical average. So the report shows us that. But what I find really interesting is what's happening with sector performance. Globally, healthcare and IT have been pretty resilient. In fact, they've even outperformed global indices in some cases, while metals and power have taken a hit. And I think that tells us something really important. Investors are looking for stability right now. They're moving towards sectors that they perceive as safe havens.
Right, so investors are voting with their wallets, basically.
Exactly.
Now, what about domestic versus foreign investors? Are they on the same page, or are they seeing things differently?
That's where it gets really interesting. We see domestic institutional investors, DIIs, pouring money into the market, but the foreign institutional investors, the FIIs, they're a bit more cautious. They're still putting money in, but it's a lot less than the DIIs.
It's like they're reading two different stories. So what are those FIIs picking up on that maybe the domestic investors are missing? Are they seeing those global risks more clearly, maybe?
Yeah, it's possible. It's definitely something to think about. But I think to really understand what's going on, we need to take a look at the overall health of the Indian economy.
Okay, so let's do an economic pulse check then. What are those high-frequency indicators telling us? What are the vital signs?
Well, there are some encouraging signs. The Index of Industrial Production, the IIP, that recently hit a 6-month high. And it's being driven by consumer durables, things like appliances and electronics, so people are buying big-ticket items.
Okay, so that's a good sign, right? People are feeling confident enough to spend money on those kinds of things.
It seems that way, yeah. But we have to remember that credit is tightening, and we're seeing some mixed signals when it comes to overall consumer behavior. So it's possible that this spending spree might not be sustainable in the long run.
Right, good point. We can't get too carried away by one data point. What about the services sector? Any good news there?
Yeah, actually, the Purchasing Managers Index, the PMI, is up, and that's largely thanks to a strong services sector. And GST collections are also trending upwards, which is usually a good sign.
So 2 thumbs up for the services sector then. But, I mean, again, we have this backdrop of tightening credit and those potential global headwinds we talked about.
Yeah.
So, I mean, is it all really as good as it seems?
That's the question, right? It's like the economy is whispering optimism in one ear and caution in the other.
Exactly.
Yeah.
Now, there's this interesting point the report makes about something called the Future Expectations Index, the FEI, and the Current Conditions Index, the CCI, that the gap between them is widening. Can you explain what that means?
Sure. So the FEI, that basically measures how optimistic people are about the future. And the CCI reflects how they feel about the present.
Okay.
And the fact that the gap between them is widening means that people are more bullish on the future than they are about what's happening right now.
Oh, that's interesting. But, I mean, doesn't that seem to contradict everything we've just been talking about, with the tightening credit and the global risks and all of that? I mean, why are people so optimistic about the future when the present seems so uncertain?
It's a fascinating question, and it kind of gets at the psychology of how people think about the economy. Maybe they believe that these challenges are temporary, or maybe they're putting their faith in the government or in some global factors that they think are going to turn things around down the road. Who knows? But it's certainly worth thinking about.
It is. It makes you wonder what they're seeing that we're not. Okay, well, let's talk about something that affects everyone's wallet, which is inflation. So what's the CPI breakdown telling us?
Well, the report shows that the category food, beverages, and tobacco that has the biggest weight in the CPI. But here's a funny thing. Fuel and light actually had negative inflation recently.
Really? Negative inflation. I mean, with all the talk about oil prices going up, that's pretty surprising.
Yeah, it is. It just goes to show that even when we think we have a handle on the big picture, there are always these little nuances that can surprise us.
For sure. Okay. And then, the report does mention that India's trade deficit is still a concern, but we won't get too deep into that right now. What about those global commodity prices, though? I mean, we know crude oil is up, but what about some of the other key commodities? Give us the highlights.
Okay, so crude oil is up about 5% since November. It's currently hovering around $77 a barrel. Coal has been relatively stable. We saw steel go up a little in January, aluminum's down, palm oil is down. The one to watch is wheat.
Wheat, okay. Why is that?
It hit an all-time high in January 2025.
Wow.
Yeah. So that's going to have a ripple effect on food prices across the country.
Yeah, I mean, that's a big deal. Rising wheat prices are going to affect everybody, but especially those who can least afford it.
Exactly.
Okay, now let's zoom in on the banking sector for a minute. The report uses this term, credit deposit growth gap narrowing. Can you explain what that means in plain English?
Yeah, sure. It basically means that the difference between how fast banks are lending money and how fast they're receiving deposits, that gap is shrinking.
Okay, and why is that important? What does that mean for the banks and for borrowers?
Well, if that gap gets too small, it can start to limit the bank's ability to lend money. They might have to be more careful about who they give loans to.
So it's another potential sign of things tightening up in the financial system.
Right.
The report also mentioned some interesting shifts that are happening within credit growth. Can you talk about that a little bit?
Yeah, so agricultural and retail credit growth, that's softened a bit, while industrial credit, that's actually picking up. So it looks like banks are maybe seeing more opportunities in lending to businesses rather than individuals.
Okay, and that kind of makes sense, right? I mean, with all the economic uncertainty, people are probably hesitant to take on more debt.
That's one way to look at it, yeah.
Okay, so we've talked about spending, but what about actual consumption patterns? What are people actually consuming?
Okay, so fuel consumption is way up. Diesel is up 6% year on year. And petrol, that's up a whopping 11%.
So people are driving more. Does that contradict the idea that they're tightening their belts?
It's an interesting question, isn't it? And it gets even more interesting when you consider that power demand has been pretty flat.
Oh, so more driving but not more electricity use. That's a weird combination.
Yeah, it is. It's kind of a puzzle.
So what about other consumer goods? How's the fast-moving consumer goods, the FMCG sector looking?
They're projecting FMCG sales growth at about 6% year on year in Q3. So not bad, but definitely in line with this broader trend of cautious consumer behavior that we've been talking about.
Right, so people are splurging on cars and fuel, but they're being more careful about everyday things.
It seems that way, yeah.
Are there any other interesting consumption trends worth noting?
Yeah, domestic air traffic, that's booming. It's up 12% year on year. But the auto sales picture is kind of mixed. So two-wheeler sales are flat, tractor volumes are down, and commercial vehicles are also down. So yeah, it's all over the place.
It's like the Indian economy is speaking in riddles.
It really is. It's a very complex picture.
Okay. Well, I think we're starting to get a sense of the major themes at play here, but let's get down to brass tacks. What's the outlook for company earnings?
Okay, so the report goes into a lot of detail on this, but the key takeaway is that Q3 FY25 results, those are going to show the impact of what they call tepid demand and slow government capital expenditure, or CapEx for short.
Okay. Those don't sound great.
No, they don't.
And can you just break those terms down for us a little bit? What do they mean and why do they matter for the average person?
Sure. So tepid demand basically means people aren't buying as much stuff. And there could be a lot of reasons for that. Economic uncertainty, high prices, you name it. And then slow government CapEx. That means the government is spending less on things like infrastructure projects,
Okay.
which can have a ripple effect on the economy, right? Less demand means lower sales for businesses, less government spending, that means fewer jobs, less economic activity overall.
It's all connected, yeah.
Yeah, and we're likely to see those dominoes falling, when those Q3 earnings reports start coming out.
Okay. So that's the overall picture. What about specific sectors, though? Who's expected to do well in this environment and who's going to struggle?
Okay, so the report says that asset management, hospitals, capital goods, and telecom, those are the sectors that are poised to boost sales and earnings in Q3. On the other hand, excluding oil and gas, we're looking at cement, metals, and IT services as the ones that are likely to drag things down.
Okay, so a mix of winners and losers. as always.
Yeah, pretty much.
Okay, well, before we get too deep into the weeds, can you just give us a high-level overview of what the report has to say about specific companies? I know they have a whole section on trading recommendations.
Yeah, they do. But I think it's really important to emphasize that these are just short-term tactical calls, not long-term investment recommendations.
Right. Full disclaimer, we're not
Yeah.
giving financial advice here.
Exactly. So, if you're interested in trading, the report highlights some companies that they believe are either undervalued or overvalued, and they give specific BUY or sell recommendations along with their reasoning. But again, it's just one perspective. You should always do your own research.
Right. It's a good starting point, but it's not the end of the story.
Exactly.
Okay. Now, before we wrap up this part of our deep dive, I want to zoom out for a moment and talk about the role of the government. What are they doing to steer the ship in these, somewhat choppy economic waters?
Ah, the government. Yeah. That's a big question, isn't it? I mean, they're obviously a major player in the Indian economy, and their policies can really make or break things.
Right. So what's their approach right now? Are they, like, stepping on the gas? Are they hitting the brakes? Or maybe doing a little bit of both?
Well, there's this ongoing debate about the right approach. Some people say the government should be more proactive, do things like stimulate demand through spending, even if it means running a bigger deficit. Others say they should be more cautious, focus on controlling inflation, reducing the deficit, even if that means slower growth in the short term.
So, yeah, the classic debate, right? Stimulus versus austerity.
Yeah.
What does the report say? Which side is the Indian government leaning towards right now?
Well, it doesn't really endorse one side or the other, but remember that point about slow government capital expenditure, the CapEx impacting Q3 earnings?
Oh, yeah.
I think that suggests they might be taking a more cautious approach, at least for now.
So maybe a little bit of austerity then.
It seems that way, but things can change quickly, right?
Yeah.
And the government's always adjusting its policies based on the latest data.
Yeah, we'll have to wait and see what happens.
For sure.
Okay. Well, I think we've covered a lot of ground here. Monsoons, currency woes, credit crunches, market signals, even company outlooks. But I feel like we've only just scratched the surface of this whole thing.
We really have. It's a huge topic.
So in the next part of our deep dive, we're going to explore some specific case studies from the report that I think will really bring all of these trends to life. It's going to be interesting to see how these things are playing out on the ground.
I think so, too. We'll look at some specific examples of how these trends are impacting real businesses and real people. Should be interesting.
I'm looking forward to it. We'll be right back. Welcome back. Okay, so we laid out the landscape. Now let's get a little bit more granular. One thing that really struck me from the first part was that divergence we saw between domestic and foreign investors. So domestic institutional investors, the DIIs, they're bullish on India. But those foreign institutional investors, the FIIs, they're holding back a bit. It's like they're looking at two different versions of India's future.
Yeah, it's a pretty stark contrast, isn't it? And while the report doesn't really try to explain this gap, you have to wonder if maybe those FIIs are picking up on some global risks that the domestic investors aren't seeing or maybe aren't as worried about.
Right. And I mean, we talked earlier about those global headwinds.
Yeah.
Rising interest rates, inflation, those geopolitical tensions. Could that be what's spooking them?
It's certainly possible, right? Imagine you're an FII and you're looking at emerging markets. And India, on paper, it looks pretty good, right? But then you see all this stuff happening on a global level, and suddenly, India's dependence on foreign capital starts to look a little riskier, or its fiscal deficit, or its vulnerability to supply chain disruptions. All of those things start to become bigger concerns.
Yeah, they're playing a different kind of game, right?
It's like economic chess. They're always thinking a few moves ahead.
Yeah, exactly. Okay, so thinking about the big picture is important, but let's zoom back in for a second and talk about how all of this actually plays out in the lives of everyday people. I mean, what does it mean for a family, say, in a small town in India?
Okay, well, let's imagine a family where the main breadwinner is a farmer. So, obviously, their livelihood is directly tied to the monsoon. If the rains are bad, that means their income takes a hit, and they have less money to spend on things like food and clothes and education for their kids.
Right, and those spending cuts have a ripple effect, right?
Yeah.
Fewer customers at the local shops, less demand for goods and services. It impacts the whole community.
Exactly. And then on top of that, you've got the rising cost of living. Inflation is eating away at purchasing power, so those essential things that they need are costing them more.
It's a double whammy.
Yeah.
And then we've got this credit crunch we talked about. So if banks are being more cautious about lending, that means it might be harder for that family to get a loan to buy a new tractor or to invest in their farm or even just to cover an unexpected expense.
Exactly. It's like a chain reaction. What starts as a global headwind or just some data point on a spreadsheet can cascade down and have a really big impact on families across the country.
Yeah. It really shows how interconnected everything is.
Mhm.
I mean, a decision made in a boardroom in New York or a policy change in Beijing, that can affect the lives of people thousands of miles away.
It's true. But, while we're talking about all the risks and challenges, we also need to remember that there are opportunities emerging within the Indian economy, too.
Yeah, that's a good point. We don't want to get too caught up in the doom and gloom. What are some of those bright spots?
Well, we talked about how sectors like healthcare and IT, they're doing really well. They're even outperforming global indices in some cases. And those sectors, they create jobs, they drive innovation, and they contribute to overall economic growth.
Yeah.
So that's a good thing.
Right. So for someone with the right skills and education, those sectors could offer some really promising career paths.
Absolutely. And then there's the entrepreneurial side of things too. Remember how consumer durables are driving growth in the IIP? Well, that suggests that there's a growing middle class with more disposable income, and that creates a huge market for new and innovative products and services.
So entrepreneurs could really tap into that growing demand, create things that people want and need.
Exactly. Think about things like, smart home technologies, personalized healthcare, sustainable and eco-friendly products. There's a lot of potential there.
Yeah, that's exciting. Even with all the uncertainty, there's still a lot of potential for growth and innovation.
Absolutely.
Now, speaking of opportunities, the report has a whole section dedicated to specific trading ideas. Just want to remind everyone before we get into that we are not financial advisors. This is not investment advice.
Yeah, full disclosure, this is more for people who are already active in the markets and who are comfortable with, short-term trading strategies.
So for those who are interested, what kind of insights does the report offer?
Well, they basically highlight companies that they believe are undervalued or overvalued, and they provide specific BUY and sell recommendations along with their reasoning. It's kind of like getting a glimpse into how professional traders are thinking.
Okay, so it's a valuable resource for those who know how to use it.
Exactly.
Okay. Now let's shift gears again and talk about the government. What role are they playing in all of this? And what are they doing to navigate these, kind of uncertain economic waters?
Yeah, the government, they're a key player, no doubt. And their policies really do have a big impact on everything, from inflation to credit growth to business sentiment.
Right. So what's their approach right now? Are they taking a proactive approach? Are they being more cautious?
Well, there's always a debate about what the right approach is, isn't there? Some people argue for a more Keynesian approach, stimulate demand through government spending, even if it means running a bigger deficit. Others favor a more fiscally conservative approach, control inflation, reduce the deficit, even if it means slower growth in the short term.
Right. So which way is the Indian government leaning right now?
It's tough to say for sure. The report doesn't really come down on one side or the other, but, remember we talked about that slow government capital expenditure thing, the CapEx, how that's going to impact Q3 earnings.
Yeah.
I think that suggests that maybe they're leaning a little bit more towards the cautious side, at least for the time being.
Yeah. Maybe a little bit of austerity then.
Possibly. But you know how it is. Things can change pretty quickly, and the government is constantly adjusting its policies based on the latest data, right?
Yeah, we'll just have to wait and see how it all plays out.
For sure. We can't predict the future, right?
Definitely not. Okay, well, we've talked a lot about the economic side of things. But what about the social and political landscape? How do those factors play into India's overall trajectory?
Yeah, that's a really important point. We can't just look at the numbers, right? We have to think about the human element too. And I think one of the biggest things to keep in mind is that India has a very young population, and that's a huge potential asset, but only if the government can create enough jobs to absorb all of those new entrants into the workforce.
Yeah, if they can't, that could lead to some serious problems, right?
Exactly. You could end up with social unrest, political instability. It's a real challenge.
So it's a race against time to create opportunities for all of those young people.
It really is. And then there's the issue of inequality. India's done a really good job of reducing poverty, but there's still a pretty big gap between the rich and the poor. And I think bridging that gap and making sure that the benefits of growth are shared more equitably, that's going to be essential for long-term stability.
So social inclusion and equitable growth, those are key.
Absolutely. And what about the political landscape? Is it stable? Are there any potential risks on the horizon?
I mean, India is a democracy. So there are always going to be different parties and interest groups vying for power, and that can create some uncertainty. But overall, I think India has a pretty stable political system. It's got strong institutions, a history of peaceful transitions of power.
Yeah, that's true. But I think it's important to be aware of the risks too. One thing to watch is the rise of populism and nationalism, which we're seeing both in India and around the world. Those forces can sometimes be divisive, and they can undermine democratic norms and institutions.
So we need to be vigilant. We need to protect those hard-won freedoms and rights.
Yeah, absolutely. And remember, India is an incredibly diverse country. Lots of different cultures, languages, religions, and managing that diversity, making sure that everyone feels represented and included, that's a really important and ongoing challenge.
It's like trying to weave a tapestry, right?
Right.
Where each thread represents a different part of Indian society.
Yeah, that's a good way to put it.
Okay, so we've talked about the economic landscape, the global context, the social and political factors at play. I mean, with all of this stuff going on, what's the overall outlook for India? Is it a land of opportunity? Is it a ticking time bomb? Or is it somewhere in between?
Well, that's the million-dollar question, isn't it? And I don't think there's an easy answer. I mean, India has incredible potential, but it also faces some really big challenges. The key is going to be, how well it can harness that potential while navigating those challenges.
So finding the right balance, making smart choices, and staying adaptable.
Exactly. And that's what makes this whole thing so interesting to me. It's not just about crunching numbers and looking at trends. It's about understanding this complex system and how all of these different forces, both positive and negative, are shaping India's future.
Yeah, it's like we've been given a glimpse behind the curtain, and now it's up to us to figure out what it all means.
And that's what's so great about knowledge and insight, right? It allows us to engage with the world in a more meaningful way. It helps us make better decisions and contribute to creating a better future.
Well said. Okay, so in the final part of our deep dive, we're going to get even more granular and explore some specific case studies from the report that really bring all of these trends to life.
Yeah, I think those case studies are going to be really interesting because they show us how companies are adapting and innovating, how they're finding opportunities within this complex and ever-changing landscape.
I can't wait. Stay tuned. Okay, so we're back, and I think it's time to look at some real-world examples of how these economic trends are playing out on the ground. The report has some interesting case studies. And one thing I was thinking about is the whole FMCG sector, fast-moving consumer goods, right? We talked about how they're projecting 6% sales growth in Q3. Not terrible, but there were some questions about consumer behavior there.
Yeah, for sure. It's a really good sector to look at because it's so tied to consumer sentiment and spending patterns. And the report actually highlights one specific company. We'll just call it Company X to keep things anonymous.
Okay.
But they're navigating this whole landscape in a pretty interesting way.
Okay, I'm all ears. So what's Company X's story?
So Company X is a big player in the packaged foods market. They've got a pretty wide range of products, everything from like the basic staples, rice and lentils, to snacks and beverages and stuff like that. And they've been noticing this shift in consumer preferences. People are moving towards healthier options, more premium products. They're willing to spend a little more for quality.
Yeah, that makes sense, right? With incomes rising, a bigger middle class people have more money to spend, so they're trading up.
Exactly. And what's interesting is that Company X isn't just sitting back and watching this happen. They're actually being proactive and responding to it. They're launching new product lines that are specifically designed to cater to these changing tastes. So things like organic snacks, sugar-free beverages, even fortified staples with added nutrients, things like that.
So they're kind of like staying ahead of the curve.
Trying to, yeah. And it seems to be working. The report says they're actually seeing growth in those premium segments, even as some of their, more traditional product lines are experiencing slower growth. So it's a good example of how a company can adapt and innovate to stay competitive.
It's like even in a tough economic environment, there are still opportunities out there if you know where to look.
Absolutely. You just have to be willing to adapt and change with the times.
Now, are there any other case studies that sort of highlight this idea of finding opportunity amidst all the challenges?
Yeah, there's a good one from the auto industry, actually. Remember how we talked about passenger vehicle sales being up, even with the credit tightening?
Yeah, it didn't really make sense.
Yeah, it seemed counterintuitive. Well, there's this car manufacturer, we'll call them Company Y, and they're actually benefiting from this trend.
Okay, how? How are they doing that?
So Company Y specializes in luxury vehicles, high-end stuff. And it turns out that their customer base isn't as sensitive to things like, interest rate hikes or credit availability.
Okay, yeah, that makes sense. If you can afford a luxury car, a few percentage points on your loan probably doesn't matter that much.
Exactly. So while other car manufacturers are, struggling with slowing demand, Company Y is doing just fine. They're operating in a different world, basically, a different economic microclimate.
It's all about knowing your market, right? Understanding who your customers are and what they want.
Absolutely. And then tailoring your strategy accordingly.
So both of these case studies, I mean, they really show that even in a difficult environment, there are always going to be companies that find a way to succeed.
Yeah, it's about being smart, being adaptable, and, finding those pockets of opportunity that others might be missing.
I like that. Okay, well, I think we've covered a lot of ground here. As we wrap up this deep dive into the Indian economy, what are like the big takeaways? What do you hope people will remember?
Well, I think the main thing is just to remember that India is a complex place, economically speaking, I mean. There are definitely challenges, but there's also huge potential. And the people who are going to do well, the businesses that are going to succeed, they're going to be the ones who stay informed, who are adaptable, and who are always thinking about, the global and the domestic landscapes, all of it.
It's like we're not trying to predict the future here, right? It's more about understanding the forces at play and making informed decisions based on the best information we have.
Exactly. And that's really what we've tried to do in this deep dive, right? We've given people a starting point, some key insights from the report, but the real learning begins when they, go out and do their own research, ask their own questions, and start to form their own opinions.
Couldn't have said it better myself. So to all of our listeners out there, thank you for joining us on this journey. Keep those brains buzzing, and we'll see you next time.